So this isn't looking too good for the stock market. The fact that the dollar and the stock market are both falling leads me to believe that this is turning into a risk-off environment. And in today's video, I'm going to go a bit in depth and explain to you what I think the next steps for the market are going to be. We're going to talk about the stock market, the dollar, the VIX, the bonds, and the yields. All right, so without further ado, let's get started with the video. And before we continue, I just want to thank everybody for 10,000 subscribers on YouTube. None of this would be possible without you guys, and I am very, very thankful. And honestly, thank you guys so much for all of your love and support. This would not be possible without you guys. And yeah, thank you guys so much. It's an honor. So thank you guys so much for thinking so highly of me for 10,000 subscribers. No pictures, no autographs, no pictures, please. Thank you. All right, so let's start the video. So basically, we see that the dollar had a red day today. All right. The dollar had a red day, but also the entire stock market and the crypto market also had a red day. The issue is that usually when the dollar shows weakness, the market is inverse, right? So, but today that's not the case. Today, it's the first signs of the market turning into a risk-off environment. So a risk-off environment, basically, risk-off, a risk is just money. So risk-off means they're taking money off of the table and they're not putting money into the stock market. So when you're not putting money into the stock market falls, all right? And a risk-on environment is when you're putting money into the stock market, stocks are pumping. So a risk-on environment, stocks move up. What I'm saying right now is a problem is because this is turning into a risk-off environment. And I'm going to explain why. So the dollar had a red day, right? The stock market also had a red day. The other thing to take a look at is the yields. So the yields, so the 2-year yield obviously is weak, right? The 10-year yield is also weak. And it's much weaker than the 2-year yield, obviously, right? With all of this together, when the yields are falling, when the dollar is falling, and when the stock market is falling, that is usually a risk-off environment. And what that usually means is that soon the unemployment rate is going to increase. And when the unemployment rate increases, that's usually the sign of a recession. So this is not looking too good for the stock market. I could be completely wrong, but this is what I'm seeing. So when the stock market is falling, when the dollar is falling, when the yields are falling, it usually leads to an increase in the unemployment rate. And when the unemployment rate increases, it's usually a sign of a recession. So this is the early signs of all of that stuff, if we're not even already in a recession. So yeah, that's not looking too good for the stock market, honestly. So this is turning into a risk-off environment. Personally, I'm not sure how this is going to pan out, to be honest. We just need to see if this is going to continue moving in this direction. But this is the first sign of some buffoonery in the market, honestly. And usually when the yields are also falling, the dollar is also falling, stuff like this, it means that Powell is bracing for, it means that they're shifting monetary policy and where they're putting their money in a way to defend themselves and to stabilize the economy and the market and everything. So definitely it's not looking too good. Especially with this big move to the downside, it would take a lot of buying pressure to bring this back up. And the fact that there's this happening with the dollar falling and the stock market falling, I don't know if that's going to happen. So this is not looking too good. We could take a look at the VIX. The VIX is also continuing to show strength. And like I was saying, you know, it probably makes sense to continue buying into longer term puts and longer term calls on volatility. And yeah, when we took a look at the bonds obviously are inverse to the yields, right? And we've been tracking how the bonds are showing strength, and the bonds move in unison with the market. Obviously, they don't work as perfectly, and today we clearly got a strong close. Basically, we have yet to see if what I'm saying is basically going to transpire perfectly, but this is the first signs of stuff like this, like decoupling and stuff like this happening. So yeah, we have to see how we just have to monitor it now day to day. Oh, I mean, look at things on a technical basis. Of course, the 390 level is the major psychological level that we're going to be watching for on the SPY. 393, 390 level, very, very important. What we could look at though is that on the NASDAQ, we are seeing a bit of a reversal, right? It's not like this could be the first signs of a reversal candle. If tomorrow we show strength, this could be like the bottoming, and the NASDAQ can start showing some strength and help pull the SPY and the IWM up, because this is clearly, you know, this looks like the start of a bit of a pop, right? And it makes sense because the SPY is sitting at support. The IWM is also sitting at support. So now it's all just going to take a bit of strength for those supports to hold. So let's see if that happens. But given the market environment, given the market environment with the rates and the dollar, just complicating things a bit. So yeah, we're going to have to see if markets just continue going up or if we are coming back to reality. So yeah, it's going to be very, very interesting next few weeks for sure. So yeah, I hope you guys enjoyed today's video. I hope I did a good job explaining what all of this stuff means and stuff, but yeah, there's a lot more research and stuff you guys could do online for all this stuff. But yeah, there's that for the video. Hope you guys enjoyed. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.